Hi, welcome back to this course on usually for hotel financial statements, understanding hotel financial statements professionally. Now in this video, in this section, we are going to talk about rooms department. So first we will be talking about the profit and loss department of the profit and loss statement of the rooms department, and then also the associated statistics that are going with the rooms department profit and loss statement. So first, let us look at these prescribed profit and loss statement format, which is prescribed by usually. So this format, as you will see on the screen, uh, revenue is divided into groups, divided into few categories. One is transient room revenue, which is again distributed by each market segment: retail, discount, negotiated, and qualified, and then wholesale, and other things. Now in this case we will be discussing all details of these statistics and details of these segments in a short while. Then the second category is group rooms revenue, where they divide into corporate, association, government, tour, wholesale, and SMERF, which stands for social, military, then really religious or federations or other type of groups. And then you have contract rooms revenue, and then you have other room revenue, and then lastly the allowances. Some hotels will combine allowance into the main revenue segments, but some usually prescribe it to be separate, for the simple reason that so that you can understand what is your gross revenue, how much allowance you are giving to your guest or rebating the revenue, so that there is some kind of control on the total on the rebates and the losses of revenue. So then you will have a total room revenue. Let us talk about first the transient room revenue. So what is a transient room revenue? So transient room revenue is also called FIT revenue, which is called frequently independent travelers. Now this revenue is divided into different segments for based on how they are generated and what rate they are generated. So the retail means usually this is your retail rate or your bar rate or your rack rate at which you are selling this hotel to a general public. This rate is non-discounted. There is no discount on this rate. The revenue is simply generated on the price list issued by the hotel, and is always available to the hotel, to the guest and to the public without any terms and conditions. If the guest has to satisfy certain terms and conditions, then it will go into other segments which we will be discussing. So the retail is very simple. You can sell it via online, you can sell it via your own websites, you can sell it via OTAs or any other segment, but the rate should not be discounted. Sometimes on the OTA you may be selling the same rate, but you are paying commission, or the OTA might be paying you the amount with after deducting the commission. Even in that case, it will go into this retail segment. The reason why is the public is buying at this retail rate, so the revenue segment will still remain the retail. You can have sub segments to identify where the business is coming from. For example, you can have under retail, you can have a sub segment for walk-in. If you have a lot of walk-in guests, you may have a sub segment for website, you may have segment for OTAs. Under OTAs also you can have OTA which are selling at bar, and OTAs which are selling after included in the other packages, or they are giving you the net amount after deducting their commissions. So that way you will be able to differentiate how the business is generated for your particular hotel under the retail segment. After retail segment you have a discount segment. Now the discount segment is a rate which is given to general public at a discount. It can be a discount, just a simple discount in terms of percentage, maybe 10%, 5%, because of anything. any occasion, or it can be a package where you are selling spa, F&B, dinner, transportation together and giving the discount on the normal rate to attract the local population, or to attract the international travelers, or to attract anybody else. You may be giving discounts on OTAs, you may be giving discounts on the your own brand.com, selling packages. This all will come into the discount. Again, it is non-qualified. The guest does not have to satisfy any special terms and condition to get this particular discount. If they have to satisfy the any terms and condition, then it will go into another segment which is called qualified segment, where which will be the next segment that we are going to discuss. For being a qualified, you have to prove that you belong to certain categories. For example, then the hotel may be giving a discount for government peoples, hotel may be giving a discount for students, hotel may be giving a discount for senior citizens, or from the same travel industry discount. So these particular room rates that are being issued to the public, and say that if you are a student, then you will get this particular discount. The revenue from these sources will go into qualified segment. In the qualified segment, again, you can have sub segments where you can say, okay, these are travel industry, these are government packages, the government, or senior citizens, or students, so that you can understand how the business is coming from, which sub segment is generating most of the revenue. Discount also, in the previous one that we have discussed, can also be subsegment by packages, promotions, local promotions, value packages, or spa packages. So you can create subsegments in order to understand the production from these different efforts that the company is doing. Right. The next subsegment, next market segment we are going to talk about is negotiated. Negotiated rate segment is for those where you have a special contract. The company has done a contract. This is not available to general public, and this is not depending on the qualification of any person. These are special contracts done with the corporates, with the government, with the other associations, where the anybody FITs or any business peoples who belong to these organizations can come and use the hotel at those particular rates. Normally the billing is done to the company, so the company may be paying it, or the guest may pay directly. It does not change the market segment, it remain the same. So the revenue will go to negotiated only if you have a special contract with any company, or any association, or any government, or any embassy, for a special rate where their guest can come to the hotel and stay and pay those rates. The bookings normally is done by those corporates so that they can identify and can get the rates. Sometimes hotel may make special arrangements with the corporate that certain peoples can book directly, and the billing can go to the companies, or they can pay on their own. It depends. However, the market segment will remain the same under negotiated. The last segment that in the FITs, or in the transient room revenue, we have is wholesale. Now, the wholesale segment is a discounted segment, discounted rate, which is given to the travel agents. These are not sold in bulk. They are not sold in the more than 10 rooms. More than 10 rooms will go into the groups. These are individual peoples, maybe a family, two family, three families coming together and selling the wholesale rate. Hotels sell a certain rate to the agents, and then agents will mark it up either as a percentage, or combine into other adventures, maybe travel, maybe air tickets, or other services that they are providing to the families or to the individual travelers, and market and sell as a package. So these are called wholesale. Wholesale can also have a sub segment. Maybe the normally the hotels will have a separate category for type A agents, which are producing the most. Then you have type B, type preferred agents, or top agents, or normal agents, or sometimes no contract, where the you are saying to the agent that you will be selling we will not be giving you any special rate, but you will get, let's say, 25% commission on or discount on the bookings that you are generating. These, since they are travel agents and these are offered only to travel agent, they will be classified as wholesale, even though you are selling the dynamic rate to them, because you are not selling directly to the guest. So those will be falling under wholesale. So these are transient, or you can call it FIT, frequent independent travelers. They are booking into these segments.